Good morning, good evening, and good night, wherever you be watching this transmission. And yes, it's back on the table. And what am I talking about? Negative interest rates. It's back on the table. It's on the discussion panel. It's on the let's bring it back up again so people later on don't say, hey, you never told us about this. But they're plainly telling us in full front sight, full stop. They're telling us, and it's all over the place. And we've been picking at this whole negative rates thing here on the channel for a good while now, kind of trying to peel back the rose, trying to get to the middle, trying to get to the center, trying to get to peel back the orange, to get to the, the damaging consequences of negative interest rates. And here it is, guys. And who is bringing it up in discussion, and who is bringing it up for discussion? The Bank of England. For the first time in 300 years, the Bank of England is now looking to go towards negative interest rates, and that's very crippling. And it's it's so damaging. We will never be a wealth building society ever again in the history. Until the history of humankind, until we find a way to beat the bank. Like Andrew Jackson said on his deathbed, my biggest accomplishment of my administration is destroying the federal bank, the foreign bankers, the oligarchs, the oligarch banking cartel, whatever you want to call them. But anyway, so let's get to what is happening here. Let's go to article scan, please. So here it is, guys. Channel. Guys, don't forget to set your reminders for live shows where people call in. Everyone's welcome to call in. We got trends in the housing market tomorrow, talking about all the housing woes across the Commonwealth and how affordability is just not there for anybody in the working poor, and the middle class is completely bought out of their own markets. Set your reminders, guys. Now, let's do a small recap on negative rates. So just so you know, we'll be talking about this for a good while now. So we're trying to kind of find out where, it's happening right now in parts of Europe. So we kind of want to see if England takes this, because if England goes ahead and administrates this, or takes this out of their toolbox as a new plan to smooth out the economy, so to say. So here it is. Negative rates on all new deposit accounts over 100,000 euros in Deutsche Bank. So Deutsche Bank now has unleashed this new negative rate thing for anyone that deposits over 100,000 euros or has a deposit account with the savings. You're going to be paying the bank to hold it for you. Let the negative rates begin. That's from a year ago. Negative rates and bail-ins down under. I thought Australia would have gone towards negative rate territory before England issued it, or they've discussed it. But that's how it starts. It starts with a discussion, and then it gets revisited, then it gets rediscussed, and then it comes into law. And then 2 weeks later, somebody gets their bank statement in the mail and says, what the heck is this? They call the bank and say, well, sir, you're paying us to hold your money. Negative rates, UK, USA, New Zealand. Can banks handle negative rates? Could you get used to negative rates? There's Benjamin Franklin that's like, help me. Trump calls Fed's boneheads and it starts going to negative and zero interest rates. Banks paying to take out mortgages. So basically, you get paid for taking out the mortgage with negative rates. Canadian real estate prices go negative, so that's something else, and we're going into other stories here. But yeah, so here it goes, guys. So Bank of England pivots and starts to contemplate negative rates. So they're kind of like out there saying, okay, you know what, guys, this might be something we need to pull out of our toolbox. Since our banking system has been severely deregulated, and we've taken away a lot of potential wealth from the people. So here's the deal. Oh, they want me to this questionnaire. How often do you use never, almost never? Okay, let's see if they let me read it. Oh my God, they want me to do a questionnaire. Okay, next article. Could your savings rate turn negative the This Is Money podcast on the weird world of the upside down rates. So this is from the Money podcast, guys. Check it out. And they have a little blurb here that goes on to say, the threat of negative rates is looming large for savers. So again, when will we become a wealth building society again? Or even, doesn't have to be wealth, a rainy day money on the side society. When are we going to get that back? Remember when ING Direct used to offer, save your money, 5% interest or 5.5% on an orange account or some weird account. You put $1 million, you get 50 grand a year on your money. Why? Because your money was worth something at one point. What is your money worth now? That's the question. Anyways, back to article scan, please. So here it is. That is over 10%. 10p per year on $1,000 saved, so 10 pence per year on $1,000 saved, and some may prefer not to be insulted in the way and have the bank or building society join the 6 accounts where obviously 0 is paid. The best accounts paid over 1%, and while that's not much, at least savers are getting a real return on their money with inflation at 0.8%. Yeah, so the return on the... so it kind of, they're getting a real... So here it is, guys. Could the Bank of England go negative? Here it is. Let's see if there it goes. It opens. Yay! Let's open this graph here so you guys can actually see it properly. Yay! It opens. Yeah. There it is. I got to go way down here. So there it is, guys, going negative. It's gonna have to go negative. Well, it's gonna start going negative, man, for the first time in 300 years. So that says a lot, right? It says a lot for how we've devalued, how we severely devalued our futures. We've devalued everything. So let's move on. That's from our friends over at This Is Money, financial website of the year. Check it out, guys. Bank of England needs to think the unthinkable to rescue the economy. Again, it's to smooth out the economy. Now, this is very dangerous. And the thing is, a lot of people aren't picking up on this. And if people don't pick up on this, it's going to be a rude awakening for a lot of people. Again, they're going to get their bank statement in the mail, and I can bet you they'll already have automated operators to say, press 1 if you have an unknown charge on your bank account. Okay, press 1. If the bank account shows this, that means you are in negative rates, and this is a charge for us to hold your money. Press 2 for Espanol. And then it goes... I want to speak to someone in English. Sorry, no entiendo qué estás diciendo. Marca uno o dos. And then it just kind of changed the topic on you, so you got to hang up. So that's what's going to happen. So Governor Andrew Bailey is signaling an extreme measures such as negative interest rates on the table. Trump has announced it. Everyone I know that every big country, Australia, Canada, right? When the Bank of England governor says he is not ruling out the cut in the cost of borrowing to below 0, there is trouble ahead. I think the rates did go below 0 slightly, eh? Negative interest rates are the last resort of the central banker and not to be used unless absolutely necessary. Here we go. Absolutely necessary. Absolutamente necesario. En esta situación. At least... that is the thinking inside the forbidding walls of the bank's offices in Thederdale Street. Only a couple of weeks ago, Governor Andrew Bailey said in effect that the bank had never lowered interest rates to below 0 and wasn't going to start now. That was the article that was 2.5 weeks ago up. And guess what? Now they're considering it. Why? Because they've already brought it forward as an idea that they may do this, they may do this, and that's how it starts, guys. While the bank rate is standing at 0.1%, that's so bad for savers. It seemed odd to make it this. So what does this mean? That people won't be saving anymore, period? That people won't be building wealth anymore? Does this mean it's over for it until there's a takedown or some sort of a rebuilding of the major banks? Like, seriously? With the bank rate standing at 0.1, it seemed odd to make a distinction between monetarily positive rate of interest and a monetarily negative one. But in the world of central banking, such posturing appears alive and well. Only those economies considered weak and feeble go negative, not the UK. Of course, there was more substance to Bailey's argument than that. Like his predecessors, he argued that negative rates would put a huge strain on high street banks, which would see their profit margins on lending squeezed. Yes, because they're going to have to pay back people for borrowing because it's negative. But they're going to start charging people for having anything in there. So there's like a two-way street too, right? So it's going to actually promote people to, like that article. I don't know if you guys remember, I was reading an article. I think it was from Indonesia, or I think it was from Japan. And the governor of a state or a province was promoting that young people are used to debt. Young people could go into debt. Young people are not as fearful as going to debt as older generations. See, I'm not in debt. I don't go into debt. I never want to go into debt, right? I like disposable income and make my choices when I need, or I like to save for a rainy day, right? But a lot of people have created this massaging of it's okay to go into debt, and that's what's scary. That's what keeps me up at night with me having 3 young children, like them walking into that mistake that a lot have, thinking, oh, well, my friends are doing it, right? That's the scary part, right? Of course, there was more substance. Okay, we got that. Last week, he changed his tune and argued it'd be foolish to rule out such a move. Now he's saying, oh, I didn't rule it out. This might work. Well, I'm not saying we're ruling it out. Hello, SA. For many economists, Bailey was recognizing the magnitude of the current downturn. And theoretically, there are ways to keep high street lenders safe from harm. Negative rates allow the borrower to pay back less at the end of the term than originally borrowed. But remember, people are borrowing so much money. See, if how much they borrowed was realistic towards what they made, they wouldn't have to lower interest rates to negative rates, because people would be making enough, they'd be getting into mortgage, and people would be sorry about that, guys. Somebody's calling me on Skype. So that would be putting people in a better position, all in all, right? But because everything's gotten so expensive, they have to keep bringing rates down. Now we're in negative territory. Borrowing becomes very attractive. I don't want that. I don't want people. Borrowing should be dangerous. And nervous households that might not have taken a loan to buy a car or a new kitchen might go ahead with credit this cheap. Okay, if you can't afford to buy a car, okay, and you have to finance a car and pay VIG on that, or you have to fix your kitchen and pay VIG on your kitchen repair, interest, juice, undercurrent, whatever you want to call it. If you guys want to start doing that, just use your disposable income. Save up for it. You're going to pay it one way or another, right? But then if you're going to pay back less, this might be attractive. But it's going to cost a lot more to now fix that kitchen than it usually did, because now the value of the currency is becoming more and more devalued. If currency was valuable, the banks would be paying you 5% to hold your money. They'd be paying you 5% to hold your money. But no! The problem lies with savers who are offered negative interest on their savings. What happens if they refuse to accept this new reality? They will take their deposits out of the banks and find another home from them. Gold is the usual safe haven from negative interest rates. Yeah, gold always protects you against negative. Gold is always the best hedge against inflation, and silver and platinum and all that stuff is great hedge against inflation, right? And if you go negative, you're going to start to see gold go through the roof. Like, I'm talking $2,000, $2,500 gold if they go negative, if they decide to go negative. So, okay, hold on. Gold is usually safe haven for negative interest rates, but middle-income families are unlikely to start buying bars of stuff or even derivatives of gold that allow punters to buy and sell more easily. Cryptocurrencies, on the other hand, long seen as an historic and volatile form of money. From it's been a long day, guys. Could take off even more than they have already with mainstream savers. So you can see cryptocurrency start taking a front seat, maybe not a driver's seat, but you might see cryptocurrency taking a passenger seat, and you might see gold driving. And you see money, fiat currency, trying to hitchhike on the side of the road. And deprived of deposits, the high street lenders will then lack the reserves they need to lend, defeating the object of the exercise. In Japan, so now Japan's been in stagsambification mode 2.0 now for a while now. But housing in Japan is super cheap. Someone told me off on the comments about Japan and this and that, and a condo in Tokyo is over $1 million US. It's like, I don't know. So I just removed that guy from my page. I have no idea what he's talking about. But we've had a couple of people on the show from Japan live told us they own several condos. You could pick up something decent in Tokyo for $100,000 US for something really decent in a good area, good, close to work, close to amenities, close to everything. In Japan, the central bank has told high street banks not to worry about deposits and other usual safeguards. It has said it will act as a backstop for the entire financial system. The European Central Bank has tried to mimic this stance and been held back from such a wholehearted approach only by the reluctance of Germany, Austria, and Netherlands, which fear underwriting the shaky financial system of their southern European neighbors. A poll of city economists found that the majority believed the unintended consequences of negative rates in an economy the size of Britain will deter the central banks from pulling that particular lever. So they think they're not going to pull the lever. They think they're not going to do it. But why do they keep bringing it up to the table? Why is it on article scan, please? Why is it on The Guardian? Right there. Why is it on The Guardian? Right? Interest rates could drop below zero. Britons may have to pay to save money. That is dangerous, very dangerous territory, because we're no longer ever in history going to be a wealth-building society again in history. And that is very dangerous. Interest rates could drop below zero in a radical move to boost the economy after a lockdown. However, this could mean Britons will have to pay a provider in order to save. See, the other article didn't talk about that too much, right? So it says here, negative interest rates are likely to erode cash. Why? Because your money's not worth anything. And could see Britons taking their money out of the banks and building societies to avoid being charged. Wonder what they would do. Probably go into maybe create another crypto, maybe create like an underground system, maybe just hold cash. I don't know. Britons have previously been warned about keeping savings outside of banks, so they warn you. And that's why B&Es and breaking and entering, they're like, yeah, well, I'll look into it next year. Because they want to keep that going so people are at fear to keep their money in the banks, right? Britons have previously warned about keeping savings outside of banks as money is not likely to be insured and could be lost forever. So they always find ways to tell you that you shouldn't keep your money in your mattress, right? And I don't tell people to, store cash at home. I tell people to store enough cash to get you out of the country, right? A couple of grand just to get you out of the country if you have to, right? Again, it's popping up everywhere. Al Jazeera, the Bank of England might, hold on, let me adjust this so you guys can see a bit better here, the photo there. Bank of England might end up paying you to borrow money. Again, they reversed the article. When you're in a tough spot, when you need it the most, it's always more difficult to take out a loan than it is when, like Scrooge McDuck, you're swimming in cash. I had to read that. I'm sorry. Yeah. The economy is weaker than a year ago, and we are now at the effective lower bound. So in the sense, it's something we'll need to look at or looking at. With somewhat greater imminency, Haldane told the Daily Telegraph newspaper in an interview published late on Saturday. So is it imminent? Is there a sense of imminency following this? Now, why the U.S. has shunned on negative rates. Now, this is important, guys. Now, the U.S. has shunned on it, but the president has basically been urging for it, right? Investors betting on interest rates have signaled that the U.S. Federal Reserve could push its benchmark rate below zero for the first time ever within the next year. While policymakers have tried to rein in such speculation, there's an undercurrent of worry among investors that they should protect against this scenario as global economy reels from the pandemic. Sub-zero central bank rates have been a reality for years in Europe and Japan, and the Bank of England isn't ruling them out. Fed officials have constantly opposed going negative, but that hasn't stopped the gyrations of derivatives markets, I never use these words, of derivative markets from driving the debate. So there it is, guys. So it's debatable, and when it's debatable, it might become a thing. The Bank of England admitted for the first time it's considering negative interest rates, but analysts don't believe it will fall through. So there it is. I think this has to happen. Not because I want it to, not because I want to see people's savings get eroded. I'm for wealth building. I'm for building family, laying roots, buying your home, setting up a base, being comfortable in life, right? Because the one thing that every millionaire, every billionaire strives to, why so many people work even if they have $1 billion, is because they're not comfortable. Once you could find that comfortable median in your life, a comfortable median where you could feel that you could sit back and say, you know what, let me take a step back. It's enough now. Let somebody else, start running the show. But for me, I could say I'm totally comfortable. People don't need to be multimillionaires or even a millionaire to be comfortable. There's a lot of people that are comfortable out there. There's a lot of people that have, set their ways or built their ways around current society to make life as comfortable as possible, right? So there is out there. If there's a will, there's a way, right? So I wanted to throw this out there, guys, because negative interest rates, it's late. It's very late right now, so I'm very tired, guys. But I wanted to make a video for you guys today. I really wanted to put this out there for you guys today. I really need to kind of raise the alarm on this. And for homeowners that are struggling, and we're going to do trends in the housing market tomorrow night, and for homeowners that are struggling just to rub two nickels together, and people that are heavily indebted in student loans and all that stuff, I'm very interested to see where these things go. I don't think with student loans, I don't think so. I don't even know how that would work with student loans. If they would go negative, I don't think they will, right? So, but I can see them obviously going on mortgages, right? And that will happen with mortgages, right? Because homes are just so, and imagine how much higher home prices would go if they go negative rates. That's scary. I never thought of that. They already have these first-time home buyer loans, interest-only mortgages, blah, 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 blah. All this Mickey Mousing to get people, first-time home buyers in the market that could barely afford to rub two nickels together. And now, interesting, how high could they go on negative rates? Would you see the benchmark go to, it's at 1.2, 1.4 in some major cities in Canada and Australia. Would you see the benchmark go to $2-3 million because rates are negative? They're paying you to take out the money? That's very dangerous territory to tread in. Anyways, guys, share this video. Get this out there. Lots of love, guys. Thanks for supporting the channel. And I'll see you guys on the live stream tomorrow night on Trends in the Housing Market. Thank you and God bless.